Well, good morning, everyone. This is Taylor Gardner with Western Marketing. Just wanted to thank you all for hopping on today's webinar with Andy Larson going over Allstate short-term medical. I did want to just kind of start this one off. We are going to open up for questions and a little bit of discussion at the very end there. I do ask at that time when we do open it up, if another agent's speaking, please, obviously don't interrupt them. And then, yeah, if you still want to submit questions through the actual question box, feel free to do that, and I'll read them off kind of as there's breaks in there. And yeah, hopefully we can have a pretty good webinar here today and some good discussions at the end. What I like to do for pretty much any type of ACA alternative type product, which short-term medical for sure is kind of just touch on the ACA and what, as of right now, we are seeing as the potential implications of what's going on. What I'm showing on my screen, this first article was put out by kff.org. They put this out in February. What they are showing here on this map is the percentage increase in average monthly premium payments without those enhanced subsidies that we've had for the past few years. As you can see here, some states aren't going to be as affected as others, but this is just going to be your average. So this isn't going to have any of the kind of the horror scenarios that we can potentially see. And I know a lot of you operate in the Medicare space, so you do run into this situation of early retirees, that being a big one, as well as one person retiring, they're the one that have the insurance, and then you still have Nancy over here, she's 62, she needs something for a few more years to get her just over to Medicare. So just kind of looking here at some of these, yeah, we're looking at 50 to 100% in Nebraska, we're looking at 100 to 150% increases for those, for just on average. In South Dakota, you can see a lot of Texas is 150 to 200. Other parts are going to be that 100 to 150 range. And I know there are a few sections just 50 to 100% increase, and that's the average. You start moving into specific clients. A 40-year-old making $31,000. They are on a subsidy cliff. So with the changes that we're kind of seeing here, it's gonna be rough for those. And I use Nebraska just because that's where I'm physically located in, to give an example. But as you can see, pretty much the entire map is 150 to 200% increase in their premium. So for a 40-year-old male making $31,000, his silver plan is gonna go up 165% here. So it's gonna go from $58 a month to $153. That $95 a month change, that's that's a lot for someone that's making $31,000. You also have to take into account that these are still $5,000 deductible plans on the silver ones, and in every state's going to be a little different on these, but as you can see, they're all just in the ballpark of 150 to 200%. Then you have, again, the horror scenario. 60-year-old couple making $82,000. They are the scary situation in which I think a lot of you might encounter. That's going to be, your 60-year-olds on that subsidy cliff. Here in Nebraska, they're going to take a 363% increase. So that's going to move them from paying $581 a month for a silver plan all the way up to $2,687 a month. And again, these are silver plans. They still have a $4,000 or $5,000 deductible. On top of that, most of these are probably HMOs or EPOs. So they're going to have to stay within the networks. And typically the networks, as a lot of us on the ACA side know, they're small. If you do run into the 62-year-old couple here, or 60-year-old couple, they might be snowbirding, which means they're not going to have much coverage on the other half of their year if they're, let's say down in Florida. So we're kind of seeing a lot of issues on that front. And so this is just going off of subsidy only changes. This is going off of this year's actual pricing. Now we can look over at another article that KFF put out. This one's going to go over the overall 2026 proposed rate changes among ACA marketplace plans by the insurer and by state in here. I'll put this article in the chat box so everyone can have access to it, and so you can look up your own state at another time. But again, these are the proposed rate changes. But as you can see, Celtic in Arkansas, which is better, 42.5% increase there. So Arkansas is going to be rough, just kind of in general. If you're looking there, I mean, the USA full neutral 58.9, but even outside of that, we're going to Arizona. Their Cigna plan 33% increase. As we all know, Aetna is leaving the market on the ACA side as well. So there might be a lot of people that do like Aetna and have Aetna currently. Well, they're not going to have ACA coverage there. So we're seeing a lot of increases here. But again, I'll put this in the chat box so everyone can kind of see it. And so this combined with the subsidy retraction, we're seeing this is going to be some pretty significant increases for a lot of people. So, you know, we were just going off of current year. If these carriers are taking 20, 30, 40, 50% increases on top of that, ACA is not going to work for a lot of clients, which leads me into Mr. Andy Larson. He has something to show. So I'm going to let Andy take it over and let him do his presentations on short-term medical.
I think, Taylor, you pretty much sold it all yourself right there. Those statistics are staggering. So, but appreciate you having me on today, and hopefully you can see my screen okay with the screen transfer from you to me. But
yep, we can see it.
Appreciate you having me on to talk about short-term medical. It's a lot of changes in the last few weeks as it pertains to durational components. So we'll get into that here in a minute and talk about or go over some of the things that or the impacts of what Taylor just described here and how we got to this point and what it all means and ways that Allstate Health Solutions for your under 65 clients, as we wrap up and we kind of put it all together today, hopefully you'll see that Allstate Health Solutions can be your home this enrollment period and beyond to do comparisons and meet all the needs of your clients that no matter what they're suited for. We're going to talk a lot about suitability today as well. But just as we get started here, again, Andy Larson, Allstate Health Solutions, worked with Western Marketing for, gosh, going on 12, 13 years now. So you've probably been to one of my webinars or seen me in one of the trips, perhaps. My contact info is here. Feel free to reach out to our team, myself, Sherry Blackwood, if you have any questions as an extension of Western Marketing. So Western Marketing has been great partners over the years. I love those guys and gals over there. So for sure, keep leaning on them for all your needs. But here, as we sit here today, short-term medical, longer-term duration plans are back. How did we get here? Well, as we all know, that 1 year ago, almost a year and 3 days ago, the previous administration set forth a final rule that in April of 2024, that would limit short-term medical plans to 3 months plus 1 month in duration as of September 1st. And so we've been operating under that arrangement over the last 12 months, or not quite 12 months. But as we've gone throughout the year, there's been some legislation passed to say that final rule has overstepped their boundaries. That didn't really go anywhere. There was a lawsuit, the American Association of Ancillary Benefits, that hasn't really gone anywhere as well. But what the current administration, the different agencies, HHS, the Treasury, Department of Labor, put out a bulletin on CMS August 7th, basically saying that they intend to do further rulemaking on short-term medical. Now, in the meantime, those departments will not enforce actions violated to that 2024 final rule, which limited short-term medical to 4 months total. So what does that mean? I'm not going to read this whole thing or go through the whole bulletin itself, but in essence, the departments aren't enforcing the final rule. They're encouraging the states to follow suit. Ultimately, it's up to the states to decide what they want to do, but they're not enforcing that final rule that limits short-term medical to 4 months. So therefore, as a carrier, Allstate Health Solutions on August 13th made the decision to revert back to the durations that we had prior to September 1st of last year. What does that mean? It means up to 36 months in a lot of markets. I believe we have 17 or 18 markets that we are up to 36 months in. A couple more markets that we're up to 24 months. We'll go through the whole grid here in a minute. Ultimately, it's still going to be varied by state, but based upon some of the information that Taylor went over and some of the information we're going to go over, it couldn't have come at a better time to provide many of these consumers that'll be impacted by some of the changes, some relief and more alternatives that might be suited for their needs and suited for their budgets based upon what's going to happen. Now, I mean, you look at all the things that Taylor talked about. In essence, we're kind of going back to 2021, putting more rigor into the marketplace in terms of verification, so on and so forth. But at the end of the day, short-term medical is going to be an important component to your toolkit for those clients that aren't quite 65 years old yet. So what are the current durational options that you'll have with Allstate Health Solutions? You'll have be able to write a policy anywhere 1 to 12 months. So whether you need 4 months, 6 months, 8 months, 12 months, you can do any option there and meet that need based upon your client's situation. We also have a durational option called consecutive plans, or 12x2, which is a 24-month solution. Now, 12x2 is going to be 2 separate contracts issued at the same time. Now, 2 separate contracts means that the policy max, whether it's 1 million, 5 million, whatever is chosen, will reset for that second 12-month term. The other component to consecutive plans is that rates will be known at the time of application, so therefore there's transparency. Now, depending upon the state, the rates may be the same for both terms if trend isn't taken, but it could vary based upon a trend or an age band change from term 1 to term 2. The second durational component is renewable plans. Now, as opposed to consecutive plans, renewable plans is 1 contract for a 24 or 36-month term. That can be chosen based on the client's need, so on and so forth. Renewable plans are 1 contract, so therefore the policy max will extend over the course of that 24, 36-month duration. And rates will be fluid based upon renewal rates, year 2, year 3 renewal. To get around that uncertainty of the rate changes between years 2 and 3, there is a rate lock buy-up available that can be purchased at the time of application. So therefore, your client will be paying a higher premium. That's just for the certainty of everything, and plus some other components we'll talk about here in a minute that will impact the longer-term durational rates. But you can choose a rate lock buy-up for renewable plans. So therefore, you have your client can have certainty for anywhere that 24 or 36-month term. If the rate's $100, month 1, month 36, their rate will be $100 as well if they choose that rate lock buy-up at application. Now, with the consecutive plans, the rates are known at the time of application for both years, but there's not any rate lock buy-up that's going to be enforced on that. So that's a consideration why one might choose consecutive plans over renewal, or vice versa if the 36-month term is where they want to land. Some other considerations with our durational options as it pertains to 12-month, any plans that are 12 months or less. If your client has the ability to pay all up front for the full term, whether it's up to 12 months, 3 months, 6 months, 8 months, whatever it might be, if they pay in full at the time of application, they can receive a 20% discount on that premium for single pay. That's just a discount given for persistency from that perspective. In addition, no matter the term duration, if your client can answer a couple extra underwriting questions within the scope of the application, each eligible adult could receive up to 20% discount for a preferred rate if they are eligible. Now, it's per eligible adult, so if you have a primary and a spouse, the primary doesn't qualify for the preferred rates, but the spouse does, then the spouse will get the 20% discount and the primary would just have standard rates. Now we say for commissions, the 12/2 is level commissions for both years. So for the 24 months, your commissions will stay the same. As of right now, that also applies to renewable plans. So your commissions month 1 would be the same as month 36. That's for the time being. Prior to last year, there was a heaped for the first year of renewable plans, and then there was a renewal decrease for renewal commissions. As of right now, we pay flat commission for renewable plans on all months. We always talk about short-term medical. It's a solution that does require suitability for your clients. Having that element in consideration when you go through that initial fact finding, asking the right questions. Mr. or Miss Client, tell me how often you use the doctor. Do you have any chronic conditions that we need to consider? We're looking to put you in the best suited plan for you in the market that has to offer. So now when it comes to short-term medical, it's not guaranteed issue. It does not cover for pre-existing conditions. So in terms of a look back, a common question we get is, well, what happens if I get sick, if my client gets sick in the first 12 months, will it be covered in years 2 and 3 of a longer term duration? The answer to that is yes. Our look back period is a 12-month look back period from the effective date of the first policy only. So if your effective date is 10/1 of 25, we're looking back on a claim for the last 12 months to determine if it's pre-existing. So therefore, year 2, we're still looking at the effective date of the first policy. Year 3, we're still, that look back is on the effective date of the first policy. So therefore, your client has any element of chronic condition in that first term, it will be covered in the second and third term as well. Now, the beauty part about our current system as it sits right now, should your client have something that pops up that requires more comprehensive care that perhaps an ACA plan would be more best suited for, our open enrollment period comes around every year, and that would be a great place for your client perhaps to take a look and see if that's a better suited option for them at that time. If there are some limitations within the short-term medical plan that your client will not benefit from based on whatever that condition might be. We also have HSA options in 7 markets as well. So those that maybe are coming off of a group plan that where they built up a little bit of a nest egg on an HSA, they can continue to contribute to the HSA. Our high deductible health plan options that are HSA compatible are available in 7 markets for your clients to be able to continue on as that with those structures as well. So when you go into our system to choose a longer term duration, after you put the demographic information in, we do put a recommended option on there. That's just because of the flat commission that we've had prior to renewal plans going to flat commissions. Also too, because of the rates, there's no rate guarantee buy-up. The rates will be known at the time of application there. And if you don't choose the rate lock buy-up on the 36-month plans, no matter who the carrier is, chances are if there is no certainty on the rates between years 2 and 3, your client's probably going to want to take a look at shopping what those rates might be anyway. So that might make a 24-month solution that much better for your client. But either way, 36-month rate lock, you throw that in, then you're going to have that set it and forget it for that full 36 months. And then you can choose a single pay option. It will default toward a 12-month term. Now, if your client has a waiting period because they just started a job, or maybe they know they're going to be going on Medicare for 6 months, you can choose whatever that end date might be in the last coverage date, and that will calculate the premium for that total coverage period needed. Now we have a couple different buckets that you can choose from. We have our Essentials plan, which is going to have you more limited, but may just serve that gap for 1 or 2 months that a client might have concern about, but at a lower premium. We also, on the flip side, we have copay options that will provide doctor's office copays for primary care physician and for specialists, and then also a generic prescription benefit as well. But where we see the majority of our sales is in the enhanced PPO option, which is in that middle bucket. And you have multiple deductible options to choose from, $2,500, multiple co-insurance options to choose from, $5,000 deductible. We're adding a $7,500 deductible. And then you'll have a choice of a 10,100% co-insurance as well. And in some markets, depending upon your client's need, if they're just looking for something super catastrophic and want to bubble wrap it with supplemental plans, we have $25,000 deductible options as well. But when you look at the difference between, say, like if we're just focusing on the $5,000 deductible range here, if we look at the difference in pricing between, say, an 80-20 or a 50-50, the out-of-pocket exposure for total deductible and co-insurance is $10,000 on each plan. So if your client has a claim that's going to max out that out-of-pocket, doesn't matter if it's 80-20 or 50-50. If you look at that 50-50 option, that saves about roughly $40 a month. You could argue that you could perhaps repurpose that money into, say, an accident plan called the Plan Enhancer with Allstate, or a cancer, heart, stroke plan to help offset that out-of-pocket exposure in the event that your client has a catastrophic loss. Okay, so as you think about whether it's ACA or short-term this year, think about where the total premium spend that your client may have, and what coverages and what packages can you create to not only find that balance of affordable premium, but also solve for the out-of-pocket exposure that your clients will face, because no matter the core health plan, there's going to be exposure. And especially with ACA, that's going to go up this year too. We'll talk about that in a minute. We talked about rate transparency, whether it's the 12x2, you'll know the rates, or the 3-year rate lock, so on and so forth. When you're in the quoting tool, if you were to click on that premium that is underlined, you can actually take into account and go over some different figures with your client to determine, hey, which term duration best fits my budget or best fits my need. So when you click on that premium, it will pop up a box that will give you all the different premium options for those specific term lengths. So whether it's just a 12-month solution, one renewal for 24 months, one renewal for 24 months with the rate lock, two renewals rate lock, or the 12x2, this will give you an option to, in one spot, to take a look at the different premium options and perhaps go have those conversations, and maybe based upon their budgets, based upon their needs, go over what those options are in one little box without having to continuously toggle back and forth between the different durations. And as you'll see here, the two 12-month terms are known at the time of application. So in this case, this is a Iowa zip code. Iowa, for example, is a state that doesn't apply trend every month. We apply trend all at one time when that comes due. So from that perspective, in this case, the only thing that would change this premium would be as if the client would be maybe 39, they turn 40 the next year, and they just hit a different age band. That would be reflected on the year 2 premium. So as our current footprint stands, again, we went back to the footprint that we had prior to September 1st of last year. That footprint based upon what those states required at the time and their rewrite rules. So each state might have a separate rewrite rule. That will be our footprint going forward, minus 3 states that have quite not yet made the turn to the back to longer durations. Montana was a 6-month state. They're currently at the 3+1 still, just by virtue of how they define short-term medical. They really don't have a definition, so they're following the Fed rule. Texas redefined the short-term medical to the Fed rule of the 2024 final rule, and they haven't given indication whether we're going to go back to that or not. And then recently, North Carolina had stated that they will continue to follow the 2024 final rule. But all other markets have their initial or original term durations available as they were prior to September 1st of last year. So as you can see, there's a range. Some states are going to remain there 6 months. Wisconsin, for example, was a 12-month state, but offers 1 6-month renewal up to 18 months. Kansas allow 1 rewrite in that state. That's just a rewrite rule. So be sure in your agent back office with Allstate that you click on the STM grid, and that'll tell you exactly what states have for durations for whether it's a 12x2 available, the renewal options available, and then also if there's a rewrite component that you need to consider as it pertains to if your client does a 12-month plan, what happens for the next 12 months if they like the solution, it fits their needs, and they want to continue on. All right, so we'll get into a couple more other highlights of the short term in a minute, but and kind of piggybacking off of what Taylor talked about at the beginning, and understanding why is this update important. Well, talk about the impact of the CMS final rule on ACA. There's a lot of things that went into it as it pertains to cost share reductions, silver loading, auto renewals, enforcing SEPs. So now outside of enrollment, if SEPs are going to be enforced, there's no more free-for-all unless you're under 150% of the federal poverty level. To where you can get on, your client can get an ACA plan. So short-term medical plans with longer durations. In previous years, from 2013 or 14, when ACA was implemented, up until the last few years where it's been a free-for-all, believe it or not, you'd see a rash of agents call us and say, well, my client dropped their ACA coverage just because it wasn't very affordable for them based on their situation. So they were looking for alternatives. With longer term, short-term medical, that's going to be important. Also, these rules are going to put more rigor into income verification. So if they're for those that might have not received a subsidy or might have received a subsidy, but maybe they didn't file their taxes or data matching proves that they don't qualify for a subsidy, maybe there's going to be more people into the short-term market. But the big piece to this, and I'll tell you why in a minute, this is why this is more important, the enhanced premium tax credits have not been extended. So the COVID era tax credits that were put in through the ARPA legislation and the Inflation Reduction Act that were extended into 2025, those were not extended as part of the One Big Beautiful Bill. So as Taylor talked about earlier, the return of the 400% federal poverty level cliff is going to come back. So we're going to go back to 2021 or 2020 levels of how the subsidies were calculated. But in 2024, we saw 24 million ACA enrollments, and that is up substantially over that 3-year period. And it's estimated that anywhere from 3 to 5 million impacted consumers will be searching for alternatives this year, or if nothing else, they're going to be looking to shop and switch their plans. So it's going to be incumbent upon you as an agent to A, be prepared, B, realize the challenge that retention is going to possibly be a challenge for you this year, and being prepared with your systems and processes. And then also acquisition of new clients. It may sound like a lot of chaos, but at the end of the day, while you deal with client retention, client acquisition could be at an all-time high for you as well. So there is an opportunity here with this. Should just by virtue of any time there's disruption, there's a chance for any agent that's on the ball to go out and build and actually grow their business if they look at it through the right lens. Now, all of this is going to rely on the expertise of a trusted agent. Short-term medical can provide savings, especially if those increases Taylor was outlining in the beginning all get approved. You're going to see clients that are going to have 100 to 200% rate increases on their premium just by virtue of rate increases and loss of subsidy. Short-term medical could save your clients anywhere from 20 to 50% on their premium and provide a better solution if they are suited for it. Now, we talk about a lot of these things, and I'm going to focus especially on that CMS final rule. It's important to know that just in the last couple of weeks, there was a judicial stay on this. So as it pertains to just whatever is happening in the marketplace, it's very fluid. So it's important to stay informed and being nimble to any additional changes that may happen between now and enrollment. But as long as if there was some sort of impact to the way that subsidies are calculated, you're still going to have an opportunity with short-term medical. But I think it's just important as we consult our clients and we prepare for enrollment that it's important to just be in tune with what's going on in the market and what the final rules will end up actually being. Does this judicial stay go away? And all of these final rules that were put in place, will they continue on? So until we know more about that, we get back to what else does our short-term medical offer in terms of plan highlights. We've always looked at our customers as wide-ranging, whether it's a traditional customer who might be in between jobs, newly independent, looking for COBRA alternatives, looking to bridge that gap between Medicare and retirement, or trailing spouses. Our clients are those that just simply want a plan that they can that meets their needs, one that's affordable, has a national PPO where they like their doctor, they can keep their doctor. But then typically it's those with low to no subsidy, low to no utilization, and this year it's going to be those that fell off that 400% cliff. So from that perspective, there's going to be more people into the short-term space other than just the traditional client that we've seen for the last 30 years. SEPs, again, we talked about that a little bit ago. That's going to be an important component outside of enrollment. We talked about national PPO. Our Aetna Open Choice PPO has approximately 800,000 providers and facilities. That's actually grown over the last couple of years. I can count on one hand how many times in the last 13 years I've been working with this network that we've had a out-of-network situation. Our underwriting is extremely simple. There are 4 questions. It's yes or no, accept or decline. You'll know on the spot. Again, it's not guaranteed issue. We do have some guarantee issue options available for those that don't qualify, that just need something to get them from the beginning to the beginning of that time, maybe to the next enrollment period. Those markets or those sales make up less than 5% of our overall short-term medical sales. Now, we do offer next day effective dates. However, just keep in mind that with next day effective dates, there comes a 7-day waiting period for sickness. That's just our way of saying, hey, you know what, for those that are just buying insurance because they're sick and they want to use it, 25% of claims can come in the first 7 days of a plan. So that's from that perspective, we look at this as insurance in terms of a matter of the what if. But that being said, if the effective date is more than 7 days out from the day the policy is signed, we waive that waiting period, no problem. That's common sense, that'll prevail. Child-only options are extremely popular as well. We see that a lot. We had a situation a couple weeks ago, especially we had an agent with a single mother who has 4 kids, and they were on a group plan, and the cost for the kids on the group plan was going to be $1,000. Looked at a short-term plan, the cost for the kids was going to be approximately $350. So a significant savings for that family, especially if it's a single mother. That premium dollar would fit that child, fit the need of her budget and cover the children. We cover childhood immunizations up to age 18. So therefore, that's first dollar, not going to be part of any subject deductible or coinsurance. Childhood immunizations up to age 18. We waive our deductible on urgent care, so there's no deductible. It's just simply coinsurance, no extra fees. If you're looking at our full portfolio and you're considering your client's premium spend and trying to put the best solution overall to meet the needs of affordable premium and out-of-pocket exposure, we can look at Allstate supplemental plans and do one application. And then when your client gets billed, they will only have one bill for all of those particular solutions that you put together, whether it's short-term, accident, cancer, dental, 2 of those, 3 of those, maybe a life insurance, term life plan to go on top of that, all bundle billed with Allstate. In most of our states, we file our plan through an association. You see a lot of association plans out in the market that have some sort of a membership fee that goes along with the premium. Ours actually has tangible benefits included with that. And that includes telemedicine, which for short-term medical clients, that's a rising feature because short-term medical clients, again, typically low to no subsidy, low to no utilization. That can be the first line of defense at no extra cost to the member. And that may be maybe the only line of defense that they need for something minor, instead of going to the doctor and having to pay all the fees for the access fees, provider fee, just to walk in the door. Telemedicine at no extra cost a lot of times can get prescriptions prescribed by a board certified physician at no extra cost or copay to the client. There's also a discount on gym memberships through Active and Fit. So for $28 a month through the Active and Fit membership, your clients can get access to Anytime Fitness, LA Fitness, Snap Fitness, so on and so forth. Typically, those memberships run about $50 a month. So that Active and Fit membership at $28 can provide huge substantial discounts, pay for itself basically with the discount. Now with this association, it's not available in every state. It's optional in some states, just depending upon if it's an association file. We file it through association to be able to knock off multiple state filings in one fell swoop. But some states do require us an individual file, so the life membership is not available in some states. Now that being said, we are going to be putting in a new feature to our short-term medical plans here in the next 3 weeks, September 24th, our September release, and that's a benefit called Recuro. Now Recuro is a separate benefit and does similar things to the life association, but we'll do it a little bit more enhanced. So with each quote that comes through after short term, when you see pricing in the plan selection page, it will include the Recuro benefit within that pricing. Within the Recuro benefit, your clients will have access to a prescription benefit, a $0 copay, up to $50 per fill for 90% of the top 400 medications that are prescribed for chronic conditions. There is a formulary that's available through the Recuro brochures that will be made available. But this is available to get prescriptions at 65,000 retail pharmacies, $0 copay, up to $50 per fill. Anything over 50 would be responsible to the member. Now, short-term medical, again, if let's just say that your client might have a condition, they take a maintenance medication for something that would otherwise be not declinable for the short-term medical plan itself, the Recuro benefit will still be available to them because it doesn't coordinate with the short-term medical. It's a linked solution, so therefore it's not part of the short-term medical plan. We don't do the verification to determine if it's a pre-X or not. So therefore, if your client has something that they're not declined on the short-term medical plan for, but have a prescription, this Recuro benefit is going to be very beneficial. The virtual urgent care benefit is going to be another component. Now, with the Life Association, it does have the Telemed for Life in that as well, but the virtual urgent care will for those states that do not have Life Association or it's optional, the virtual urgent care will provide the same element of access to a physician to get some of those first line of defense needs out of the way and determine if going into the provider or emergency room or whatever it might be would be that next step. So 24/7 access from mobile device or computer, board certified doctors. I believe the response time was about 7 to 8 minutes the last time I checked. Now, as an add-on to this, there is going to be another virtual service called Virtual Behavioral Health, where consumers, if they choose this, when the client clicks enroll the short-term plan, there's going to be a box that pops up that shows the Recuro benefit in the cart. Whatever reason you don't see value in $0 copay for prescriptions up to $50 fill, and you don't want the Recuro benefit, you actually have to physically take that out of the shopping cart. We do see about on other products and solutions we have this Recuro benefit in. It does have on the prescription side between 15 and 20% utilization, so that's pretty substantial. So there is value in the solution, and it is commissionable as well. But if you wanted to add the virtual behavioral health, there is a radio button within that box that would pop up that will allow you to add that virtual behavioral health if your client wants to have ADHD symptoms walk through or any other sort of symptoms that might relate to behavioral health. So that's the short-term medical plan. Talk about maybe why we're looking at the importance of this right now. Some of the changes going on in the marketplace. We talked about, though, as it pertains to premium spends, what are some other solutions that you can take into account for and create that package solution so that way your client meets the needs of affordable premium and then also meet the needs of insuring against out-of-pocket exposure, because really, folks, the premium, that's just kind of that's the necessary evil. The real impact to your client is when they actually have a claim and they're out upwards to $10,000 a month. Now, especially even on ACA plans too, out-of-pocket exposure is going to be going up as well. So from that perspective, that makes supplemental even a more important conversation there, especially as you see potentially that shift because of some of these changes to subsidy calculations, cost share reductions. You may see more people going to bronze plans, which will raise the out-of-pocket exposure as well. So let's take a look at a case study here, and we'll kind of tie in what Taylor was talking about earlier as far as rate increases. And now with these scenarios, we're going to be looking at today's rates. We're going to pull rates from our system, so you can go on and you can verify these rates. We have not only our Allstate rates, but we also have ACA rates available within our platform, and those rates are powered by Health Sherpa. So we are feeding in ACA rates for all FFM markets into our quoting platform. We'll talk about why that can be a pretty impactful solution for you here in a minute. But if we're looking at, say, a family of 4 in Des Moines, Iowa, husband, wife, 40 years old, have 2 kids, their household income is $130,000. In 2025, this family of 4 would get a subsidy of $430 a month, cost share reduction up to 47%. If we were to just examine the lowest cost bronze plan in this market, now in 2024, 55% of enrollments were done in the silver level. But for sake of example, we're going to look at just the lowest cost bronze plan, do that comparison there. So you'll see, and this is again Des Moines, Iowa. If you look at the 3 carriers in this market, you look at the lowest cost bronze plan from each. Those rates range from anywhere from $486 to $597. And you might see that there's a specific hospital system within one of these plans. Taylor touched on that earlier, that the ACA network's being reduced, right? And we talked about short-term medical, 800,000 providers across the country. So you'll find that our network is going to be all-encompassing. But let's take a look at 2026. In 2026, that $130,000 income is going to put this family of 4 over the cliff. No subsidy. So you see here at 2025, underneath the 2025, that $430 a month subsidy ranges anywhere from $486 to $597 on the premium. In 2026, not even factoring in this market potential of 10 to 15% rate increases, just comparing to 2025 rates in 2026, those rates go up almost 50%, about 45 to 50%. So now we're ranging from $916 up to $1,027. Now think of it this way too. On bronze plans in 2025, the family out of pocket is $18,400. For a family, it goes up to $21,200 if that bronze plan has full out of pocket exposure that's allowed by the marketplace. And also, when you look at these plans, that not only does the insured have to pay the premium, but there's no supplemental plans to help offset that $21,000 should they have an out-of-pocket exposure that impacts the family. So if we were to look at the short-term medical option, we've determined based upon our fact finding that this client or this family, low to no subsidy, low to no utilization, they are suited for this solution. You've asked all the right questions to determine if it's a fit. They know what it is, they know what it's not. They decide, let's take a look at this option. Well, we look at the short-term medical. We looked at that 12x2 plan. We looked at a $5,000 deductible, 50/50 coinsurance, $10,000 max out of pocket. For this family of 4, that premium is $524.48. Now, in this case, we added a $5,000 accident plan called the Plan Enhancer. And within that Plan Enhancer, we added a rider for hospitalization due to sickness. So on top of if your client has an accidental event, this plan will pay out $5,000 in a separate bucket if your client is hospitalized for 24 hours or more admitted due to a sickness. Pays out one time for an individual, twice per family per year, on top of paying out for accident events as well. In addition, we have added a cancer, heart attack, and stroke benefit of $25,000, pays lump sum for first cancer event, and then in a second bucket for a first ever heart attack and stroke event. We've recently made our $25,000 and $30,000 benefit levels for cancer, heart attack, and stroke guaranteed issue. So between the Plan Enhancer and the cancer, heart attack, and stroke, these are guaranteed issue solutions that require no underwriting. The total premium spent for this particular client would be $654.57. So as opposed to paying minimum $900 for the lowest cost bronze, probably going to be $1,000 next year for that particular client. Once you look at rate increases, not only have we saved this client 35% on their total premium spend, we've included these supplemental solutions to help offset the out-of-pocket exposure or provide relief in the event that they have an accident. They are hospitalized due to sickness, one of the big three: cancer, heart attack, or stroke. We provided a value proposition taking into account a premium spend that is comfortable for your client, put suited solutions in such as short-term medical, and included out-of-pocket protection solutions that will give them peace of mind when it matters most, and that's at the time of claim. This total solution, $654.57. Compared to the lowest cost bronze plan in this market, saved the client 35%. You provided value and you've added extra revenue in your pocket as well. This solution between the short-term medical plan and the plan enhancer offers a first-year commission of roughly around $1,700. So you, by providing value that's suited to your client's needs, you're able to grow your business as well for these clients that are suited for short-term medical. We talked about on ACA, out-of-pocket exposure is going up for an individual, $10,600. For a family, we talked about it's $21,200. So that's a big jump from $9,200 in 2024. So how does that mean from a standpoint of ACA? What are the impacts there? Taylor's talked about the premium. We talked about some of the potential rules that could be enforced. But we always come back to suitability, no matter if it's ACA or short-term medical. What are you bubble wrapping that insurance plan with, and how are you packaging that client in that delicate balance of premium spend and protection? Well, first ask the right questions. Does your client still qualify for a good subsidy? Do they have chronic conditions? ACA might be the best choice for them. If they have low to no subsidy, again, low to no utilization, no chronic conditions, they still might want ACA just because it's what they're used to and what they're comfortable with. But it's important to open their eyes to potential alternatives such as short-term medical that can meet their needs premium-wise and also be able to package in some of those other solutions at a price point that's affordable. Move protection, asking the right questions there. Many consumers don't know that some of these products exist. We talk to a lot of agents that still have preconceived notions that their clients can't afford it. But it's just asking the right questions and educating your clients. Hey, how would it impact you if you had an accident and you had to write a check for $9,000 or $10,600? Would that impact your budget? How would that feel, or how would that impact your family's finances? So educating your client that these solutions exist, giving them the right of refusal is going to be important here, this enrollment solution, no matter if it's ACA or short-term medical. So you factor in, we talked about how, I mentioned earlier, 55% of plans in the marketplace last year were silver plans, and about another 14% were in the gold level plan. So about 70% of plans in the marketplace were written at the silver or gold level. It is anticipated that this year, to find that, again, that delicate balance of premium and for protection, that many consumers will go down to that bronze level this year just because of the rate increases Taylor described, the subsidy calculations changing, so on and so forth. That still doesn't solve for the fact that in bronze plans, the chances are those out-of-pocket exposures are going to reach $10,600 in a lot of cases. So it's important to have that conversation with your client on ACA as well, if that's what they're suited for. So to wrap up my presentation here today, I'm going to preview something that Allstate is doing to help you as an agent have one single shopping cart or one single shopping spot to be able to do that comparison, that suitability comparison, to determine what needs do your client have, which direction is best. So Allstate Health Solutions has teamed up with Health Sherpa. Again, I talked to you about this earlier, where Health Sherpa powers ACA rates on our platform. So you log into Allstate, there'll be a button that says Health on Exchange. You'll be able to see ACA quotes in all the federal facilitated marketplaces. You'll be able to calculate subsidy and be able to filter down by metal level, carrier, so on and so forth. Now, the nice part about this is because you're on the Allstate site, you can do that comparison to short-term medical. So you can put that plan together for, calculate that subsidy for ACA. You can compare it to short-term medical. Now, if it's an ACA suited client, you can still consult them on putting together a shopping cart of perhaps it's AM Better, and then Allstate Accident or Allstate Indemnity or Allstate Cancer, Heart Attack, and Stroke. Whatever their sensitivities might be toward meeting out-of-pocket exposure, you can add that solution of solutions to an ACA plan on the Allstate site and present a single shopping cart premium to encompass that full premium spend. Mr. and Miss Client, you told me your budget was $300. Based upon that and based upon the subsidy you qualify for, we found this plan. It's going to have a $10,000 out of pocket, but there's also coverage built into this solution for under $300 that's going to offset for accident and offset for cancer, heart attack, and stroke. Those are the conversations that you should have. And if they say, well, that's too much, then you can pare it back. But the nice part is that as we get through a couple more stages of development on this, you'll be able to connect that ACA application from the Allstate site to your Health Sherpa site if we have the proper coding for your Health Sherpa account baked into our system. We're working with Western Marketing and Health Sherpa to provide those Health Sherpa codes. So that way, it'd be like if you're contracted with Allstate, it will be like another product code in our system. It'll connect you to your Health Sherpa account where you have all your data housed and you can continue on with that ACA enrollment. Now, when you completed the ACA enrollment, you can return back to the Allstate site by clicking a button at Health Sherpa, and that will land you in the application for the Allstate products, and it'll take you an extra 3 to 5 minutes to earn a potential $200 to $400 in extra commission, and on top of providing your client with that exceptional value that meets all of their needs. Now, and realize that a lot of disruption that is going to happen in these markets this year. So from that perspective, it's important to do that suitability shopping. And with our platform being able to do that comparison between ACA and short-term, maybe one sells the other, and depending upon your client's situation or your market, being able to do that suitability comparison, solving for that MOOP gap as well, one ecosystem, simplistic enrollment flow. You're not going to have to go to multiple systems to do multiple quotes and try to add it all together. Allstate Health Solutions, our tool can do that for you. In fact, you can go quote ACA plans today, compare it to a short-term medical plan. Now, I would recommend a better comparison will be when window shopping starts, once the marketplace releases all the 2026 rates. But at the end of the day, you can do that comparison shopping, and then we'll work with Western Marketing and Health Sherpa to get any Western Marketing agents that contract their ACA carriers through Western Marketing to get them that access here in the next couple weeks. Ultimately, too, education. We are going to be doing more upcoming webinars. Aside from working with Western Marketing, we do have some webinars as it pertains to the Health Sherpa piece that is going to be happening in the next couple weeks. So be sure to be in tune for those if you have any questions on the Health Sherpa side of things. But also, we're just going to provide some of these best practices. We talked about challenges that you may face as an agent in terms of retention, having a system in place to make sure that you're meeting your clients where they're at now, rather than some of the nefarious characters in the market we've seen over the last couple of years getting in front of your clients before you do, and making sure that you have your processes in place as far as not only enrollment tools, but scheduling, and making sure that the documentations that your clients need to meet some of these new rules are going to be put in place as well. So from that perspective, you can go to our team resource page to get more resources from us. Put up that QR code. We'll leave that up here for a second, but we'll come back to it. At our team resource page, you can find brochures, access to our YouTube, one-pagers. You can register for short-term medical or, Health Sherpa webinars. And then you can also find recordings as well at our page. So if you need any additional resource from Allstate, you'll be able to go back to some recordings that we've done as a as a sales team here at Allstate to get information to our partners. So again, here's that QR code if you have your phones handy to take a snapshot of that and get you connected with Allstate. I encourage you to bookmark that page. So today we talked about a lot of things. Taylor kicked it off nicely, and we kind of went down the path of what Allstate has to offer for our short term, how we got to this point, some of the features and highlights, why it's important for today's market, and hopefully we opened your eyes to a tool that we have on at your disposal through the Allstate Health Solutions quoting platform to allow you to do that comparison, suitability, shopping, and also solve for the out-of-pocket exposure that is going to be high in your clients' minds this year as well as out-of-pocket exposures go up. So on behalf of our sales team, I wanted to thank you all for joining us today, and also Taylor for setting this up at Western Marketing. And if there are any questions, I'd be happy to take them at this time, Taylor.
Perfect. Thanks, Andy. Yes, we have a couple questions. So we'll crank out the ones that got sent in the question section, and then I'm going to unmute everybody, and then basically just click on that little red microphone when it's unmuted, and then you'll be able to chat. If your mic's not working, or if you don't want to, just put your questions in the chat, and I can read them off as there's breaks in between. The first question that I had was from Mark. It was a little bit earlier in the webinar, but I didn't want to interrupt you, Andy. But his question was during kind of when you're running through the short-term medical with Aetna, that PPO plan, does your coverage pay benefits based upon UCR or scheduled charges?
It's scheduled. So if in network, it's going to be based on the network discounts that we have on the schedule. Out of network is UCR. Like I said, I can count on. Yes, average discounts will range, depending on service, will range anywhere from 25 to 40% for in-network services.
Perfect. Lynn also asked, so will these solutions be cheaper than ACA? I can answer that one. It's depends. It's going to depend on the client. It's going to depend on the rates, depend on the state, the carrier. I mean, there's so many little factors, and that's kind of where Andy was talking about that Health Sherpa integration that they have. Is when you quote it, you'll be able to quote the ACA up right next to the short-term medical. And so some clients, ACA still might make sense. They still might be getting full subsidy amounts, or at least enough subsidy to where, it does make more sense. Other times could go the other way to where they're not getting enough subsidy and short-term medical makes sense. And so that's kind of where you as the agent, you have to quote it out and see, it's going to depend on every single client.
Yeah, piggyback on that, Taylor, too. And that's where you're fact finding up front, asking a few basic questions to determine, which route you go, and being able to do that suitability comparison and doing that shopping with just a toggle of a screen within our site. It'll make your life a lot more efficient, this enrollment, especially if there's going to be more shoppers and switchers that are going to be asking for alternatives. I'm going to go ahead and unmute. I know, Lynn, you got a couple more questions you've been firing, so I'll unmute it and I'll just let you kind of fire them off here.
Yeah. But I just want to make sure that I understand this clearly. Can you guys hear me?
Yes, we can hear you.
So short term, I mean, it take this long, or only short 3 months in place of ACA?
I'm sorry, say the question one more time. You did break up just a tad.
And they take this over the ACA for a 12-month period, or is this just a short-term benefit for 3 months only?
It depends upon the state. Obviously, you're going to go back to that map that we showed earlier. But over the years, consumers have looked at and dependent upon if it's a a state where the premiums aren't affordable, where there's only, in some markets we've seen over the years where there's been one carrier in a market, consumers have chosen this short-term medical solution. Now going up to 3 years now in select markets does provide that runway for longer term durations, whether it's 12 months, 24, or 36 months. If an agent has advised their client that this could be a suitable alternative based upon their needs, many consumers have looked at the short-term medical as their primary health insurance.
Okay. So based on what's happened in the market, things have changed a little bit, because I thought they were just doing this for 3 months and then you couldn't renew and all that kind of good stuff. So
So we covered that earlier too. That were on August 7th, the CMS put out a bulletin that there was a between the 3 agencies, HHS, Department of Labor, and the Treasury, that they weren't going they intend to make further rulemaking on short-term medical, but that won't happen until next year. But in the meantime, they're not going to enforce carriers that violate or that don't adhere to the final rule of 2024, limiting short-term medical to 3 months. So therefore, our legal department determined that we could go back to the longer-term durations that we had prior to September 1st of last year when the 2024 rule went into place. And from that perspective, we've heard back from the states that have said, no, we're going to continue to follow the federal rule, but that only impacted 3 of our 32 state footprint.
Okay. And then, I was trying to do 2 webinars at the same time, so I apologize, but the unessential benefits, you guys don't offer, I'm assuming, did it remain the same where mental health is not covered and pregnancy is not covered?
Yeah, pregnancy is typically an exclusion on short-term medical across the industry. So again, suitability, if your client's planning on having a child, definitely want to consider that before making that recommendation. Mental health, no coverage for the mental health. However, with that Recuro benefit that we're adding in, there is a virtual behavioral health benefit that can be added onto it. So that can help supplant what's not covered on the actual plan itself, but it's a linked plan that can be added on to it should that need be there for your client. As far as preventive goes or essential benefits, it is not an ACA compliant plan, so therefore it doesn't meet the requirements of all the requirements for preventive, but there is a schedule. I'm not going to go through each one of them individually, but it does lay out in our brochure what the schedule of preventive services are, and depending upon the plan, it's just subject to deductible and co-insurance. Childhood immunizations, though, are covered first on age 18.
Okay. And I think I have one more question was, because I'm licensed in 40 states, New York, New Jersey, New York's a different animal, but New Jersey, Florida, up the East Coast or whatever, are we going to get a copy of these slides or no? Or is it possible?
I don't know, Taylor's doing a recording, but let me go back to the, I'll go back to the map. Here's what, bear with me on my scrolling here.
Lynn, I can email you. Yeah, I can email you as well. I have the details by state for short-term medical as well, so I can send that to you as well. But yeah, like New Jersey is not going to be in there. They don't do it. New York doesn't do it. Pennsylvania doesn't do it, but Florida for sure does. Florida, Georgia, Alabama, Mississippi, all those states are definitely do it. But I have the sheet I can send over to you, and I'll send that out with the recording here after the webinar. I just got to get it uploaded and everything, and
Perfect.
then I can get it out usually within an hour.
Yeah, Taylor, I'll send you an updated grid too that we just updated with North Carolina.
Perfect.
Where's the sweet spot on this? Does this work well? I got a ton of people for Medicare, so before they go on here, sometimes they think they're taking a COBRA option, and they can, and they're a group of under 20 employees, and they're not getting real option because Medicare is primary. So, so where is the sweet spot? Can I get something like this for them for 90 days and, until they go into the Medicare, or how does that work?
Yeah. So if let's just say you have somebody that retired at 62 and they wanted to look at a 3-year plan, if they're in one of those states, and they wanted to just, it fits their needs, they are suited for it, this can be certainly a suitable alternative for those particular folks. If they have if it's, let's just say spouse one retired, but the trailing spouse is still 62, but based on the retiree that they held the insurance, they might need a solution. Again, if they're suited for it, then it could be an alternative. We talked about if there's somebody that is on a waiting period, maybe they have 60, 90 days. Absolutely. If you're a group agent, I would recommend including short-term medical in every single one of your presentations, because you're always going to run into waiting period employees that may, okay, well, 90-day waiting period or 60-day waiting period. Well, I don't have any coverage, Mr. and Miss HR. Well, let's do this. And you can actually, as an agent with Allstate, you'll have a consumer link that you can leave behind with that administrator. So that way the client could actually self-enroll and would tie to your agent number. And then that way that can serve as an extra tool as your group for your group clients. And then ultimately too, the small groups, if there's no COBRA alternative, if state continuation applies based on state rule, if COBRA is not an option, if that employee separates from that business, whether it's for cause or on their own, those options will be presented. And if they determine that's not affordable, they can look at the short-term medical option if it meets their needs.
Okay.
Absolutely. Yep.
All right. Perfect.
So
Okay,
group
great.
agents out there, be sure to include this as part of your value proposition.
Okay. Wonderful. Thank you very much.
You bet. Great questions.
That's all my big mouth has for right now.
Perfect. I guess we have a few other questions. Where can I download your brochures? Can we access slides and information? Yeah, I'm going to send out a bunch of this stuff afterwards. So don't worry on that front. Otherwise, yeah, you can download the brochures here from allstatehealth.com. Everything's on there. When you get contracted, because I do see we have someone asking about contracting. I'm going to send an email out to everybody. Feel free to shoot me an email back. Just say, hey, set me up. It's easy. I will log into our portal and I'll send you an invitation to get set up. Usually we can get contracted here fairly quickly. So do you know what the turnaround time is right now, Andy, by chance?
For contracting, our process is all automated. So when you contract or request, request a contract from Western Marketing, they'll send you a link. And once you click on that link and you fill in your information, it takes about 10 to 15, maybe 20 minutes. You fill it out based on if you're an agency or an individual agent or a sole proprietor. Once you hit the submit button on that, you will receive a welcome letter the next morning that will provide you details of your agent number with Allstate and then give you instructions on how to access your agent tools. And then, so it's really 24 hours, not even 24 hours in a lot of cases. But typically 24 on if there's a system outage, maybe 48 hours, but it's fastest in the business, in my opinion.
Perfect. I know Lynn had another question here, just kind of asking, about who is Western Marketing and I guess how we compare to other FMOs. I believe that we're the best, but that's me. Obviously, my opinion is slated towards us, but no, I mean, we're here to support you guys. We have access to all the carriers. We are in all 50 states. So we don't have any trouble as far as getting agents set up. If you ever need anything from us, feel free to give us a call. We like to host these webinars and discussions with all of our agents. We typically have webinars here usually twice a week, pretty much every Tuesday, Thursday. We try to at least have a webinar at about 10 a.m. Central Time. But I mean, our big thing here is we're kind of here to support you. I know I have a lot of agents on here that have worked with me for years. So and most of the time they don't hate me. So I try to help you guys out as much as possible in any way, and as do our other marketers here. So yeah, I mean, besides that, anybody else have any more questions, feel free to unmute yourself and ask them. Otherwise, we can kind of end it. Lynn, if you want to give me a call, our number here is going to be 800-852-7152. I can definitely kind of get into more details about us as well. And then, yeah, once I get that email out to everybody, feel free to shoot me an email back. Just say, hey, Taylor, I'd like to get set up with Allstate. I'll get you the contracting. We'll get you all up and running. And then, yeah, we'll get you guys set up here for this upcoming open enrollment. So it sounds like we don't have any more questions. So I think we're at a good spot to end it. So thank you everyone for attending. Thank you, Andy, for presenting here and showing everything that Allstate has to offer.
Appreciate you, Taylor. Thanks everyone for jumping on, and wish you all the best this enrollment period or enrollment season.
Could I get the number of that you just gave us again?
Yeah, it's 800-852-7152.
Thank you.
Yeah, not a problem.
How about the email address too, Taylor, for you?
Yeah, my email is Taylor, TAYLOR, at WMAcorp.com.
Thanks.
All right. Well, thanks everybody, and have a great day.
Thanks.